Welcome, everybody, to Trading Nation. I'm Tyler Mathisen, and we're joined today by Dr. Ron Paul, former U.S. Congressman from the state of Texas. Congressman, Dr. Paul, welcome. Good to have you with us.
Thank you. Nice to be with you.
You know, the topic du jour in the markets over the past 4 or 5 days have been the prospect of tariffs on imported steel and aluminum. Where are you on that?
Tariffs are taxes, and I'm pretty clear on where I stand on taxes. I don't like taxes. They're way too high. I want to lower them. It's surprising the administration, I think, is opposed to taxes, don't want to raise taxes, pretend they're lowering them. But when you put a tariff on, the American people suffer. They have to pay it, and that is a tax. And its interference in trade is a big deal, and I don't think there's any benefit whatsoever with tariffs. And most of the time, even conservatives and liberals can agree on tariffs not being beneficial. So I don't think the tariffs are any good. I don't like them because it's a tax, and I like the marketplace, which would reject the notion. But my biggest beef about this whole episode on tariffs is, why do we allow just the president to be able to make these decisions? That's not the way it's supposed to be, and yet here he is. He just signs an executive order, and he can put a tariff on. And I think this is a congressional function, so who knows what will happen. There'll be some fighting and bickering over this, but right. I don't like the tariffs.
The Speaker has today, as you probably know, come out basically saying, hey, wait a minute, not so fast here. This could do some damage. Do you think, I mean, the president, if nothing else, can be mercurial and can change his mind fairly quickly? Do you think that he could be subject to some pressure from the outside that would make him change his mind and go, well, either I'm not going to do what I said I was going to do, or I'm going to apply these tariffs much more in a much more pointed, targeted way?
And that, I think you've just stated the problem that we face in trying to analyze the administration. Which way is he going to go? And right now, from his little comment I think I heard today, was he was going to bear down. And he wasn't going to get pushed around. And if he gets in that mode, he won't. And he'll have to end in a different way. Maybe this effort to put on tariffs might end the way they ended for George W. Bush, you know, in 2002. He put on tariffs on seals, and it didn't go. But, you know, I complain about the executive branch putting on the tariffs and not the legislative body. But back in 2002, it was the WTO that got in charge. Oh, well, he's breaking the rules, and WTO rules over anybody in the Congress. The president can't do it. I like free trade. That means you don't have managed trade, you don't have the WTO, and you don't have the executive branch doing this. You just allow the market to work, and unfortunately, we're a long way from that.
You know, Dr. Paul, you're known as a close and astute observer of markets and their behavior. Obviously, the equity markets have been very prosperous over the past few years. This is actually, in a couple of days, the 8th, I believe, anniversary of the bull market that began in 2009 or 2010 or thereabouts. But I wonder what you see right now as the biggest risk to the stock and bond markets.
Well, I think they're overpriced, and you know, it's been a lot of years, matter into the decades, when we've had bonds being in a bull market, and when you have zero interest rate, there has to be distortion. That is so far removed from free markets that there has to be a lot of distortions. Even when it's less complex and the Fed is just rigging the interest rates, there's a lot of distortion. So the money doesn't go exactly where the planners want it, and that's been the frustration here since this last recession started. They had all their QE, and they complain it's not doing what it's supposed to do, and on, because they can print money, they can distribute the money, but they can't control exactly where it goes. And that's what they're fussing over. Now it looks like some of this money is leaking out, and it certainly has boosted the stock market. I don't think you can justify those prices on the stocks just out of value. I think there's a lot of bubble there, a lot of speculation because of excessive credit, and that's the danger of the excessive credit and artificially low interest rates, is you get the distortions, and frequently they're called bubbles. And this last modest correction, a couple thousand points, I think this is an indication of the leakage of the bubble, and I think people should be more concerned about what's coming rather than going back into a super bull market again.
Then let's talk about that and tease that thought out a little bit. A 2,000-point correction in the past month or thereabouts. Are you worried that 2,000-point correction could turn into a 5,000-point correction.
Yeah, but I wouldn't use the word worry, because inevitably some corrections have to be made. Corrections are supposed to be corrections and help things. But if you keep patching it together like we did with the QE, that just made the bubble bigger and bigger and bigger. Now it's starting to leak. And now what are they going to do? They're going to keep patching it up. They're not going to allow. That's why I don't think they're going to deliberately keep raising the interest rates. I think interest rates may go up, but maybe people will quit buying our debt, because I think it's our debt problem that is significant. And you just can't run the whole world on debt, and the whole world depends on the dollar. So eventually interest rates will go up, and if the Fed continues on the things that they are sort of planning on doing, it's going to be a calamity.
Well, let's talk about that. If buyers stop buying debt, and if the Fed is not buying a lot of the government's issuance of debt, which it's not going to be doing, obviously, as it unwinds the quantitative easing effects, what is the scale of the calamity that investors ought to be ready for? If not, it may not happen. Let's hope it doesn't. But what is the scale of it?
Oh, I think it's huge. I think that we have a greater distortion and a financial danger sitting out there bigger than ever before. I don't think the world has ever experienced anything like a fiat currency that's lasted for 40 years and getting away with a rigged election, a rigged economy with artificial interest rates and this huge deficit. Everything is just, very burdened with debt, and there's no stopping it. I just don't think the average person buys bonds for an investment reason. It doesn't make any sense. So no, I think the correction is going to be huge, and I don't think anybody can predict. But I think this correction we had in 08 and 09 wasn't allowed to really go its course and restore some sensibility to the market. I think that will be a mild correction to what could happen. I really think it's big because of the dependency on debt. And what about the dynamics of how many young people are working and producing versus how many people are retiring, and what these pension funds are like? I mean, to me, I guess it's easier for me to see the problems than to say, oh, this is going to be easy. But it's not going to be easy. I think there is going to be significant changes to recover from this, and it's going to have to be with things as major as monetary reform and deciding what kind of a country do we want to have. Are we going to be able to have an unlimited welfare state, an unlimited empire around the world, and be able to do the things that we pretend that we have a responsibility for doing? I think we'll have to make those decisions, not next month or so, but if you look at some of those long-term charts, I mean, I think the dollar really is, on long-term, if you look at the dollar compared to, say, the Swiss franc and to gold from 1971, that means the dollar is very, very weak on a course. Right. I think that's going to continue, and I think it'll accelerate. All
right, Congressman Paul, thank you very much. Appreciate your point of view. Always good to see you.
Thank you, Tyler.
All right,
thank you, Tyler.
Dr. Ron Paul. And that is Trading Nation.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.